Bring it in. Bring it in. We already got that wind effect rolling. Oh, yes, sir. Yes, sir. Bring it in, people. Bring it in. Bring it in. Bring it in. Listen. Just tapping straight off the top, we have, as everybody should experience, what seems to be a market shaking, trembling like an earthquake. Right now, I'm going to share a clip with y'all that's got Kevin O'Leary in it, some other people as well. They're basically talking about the current state of the market. I don't know why we're still even having to say this, but they're talking about it looks like a recession's coming. We already know a recession's coming. Banks are collapsing, but like I said, Kevin O'Leary's going to talk about the rolling bank crisis. Obviously, as y'all know, we have more banks that are simmering down and popping. Guys, I think there's going to be a bunch of smaller banks that are going to get obliterated. This is going to be something insane. But nonetheless, let's tap into this. Like I said, then we got some follow-up with our AMC stock at the end there, baby. Let's get down to it.
Cycle. What's occurring now is trying to determine what percentage of the 4,500 regional bank branches are next. In other words, go insolvent. And
Kevin O'Leary
really
don't play.
It comes down to what we've seen for these first three, two of them in California, one in New York. It boiled down to, for lack of a better term, idiot management.
A dire warning on the banking sector from investor Kevin O'Leary. This is stocks tumble, awaiting a potential rate hike from the Fed tomorrow. Joining us now is Strategas CEO and Chairman Jason Trennert. Jason, it's always great to see you. Thanks so much for being here. Let's talk about the action that we're seeing in the market today. First of all, you've got potential run on a couple of these smaller regional banks. The market is digesting whether or not the Fed will move tomorrow. Not really sure what's going on. Wall Street people love to say that everything is priced in. Doesn't seem to me that any of this has been priced in.
I don't think it's priced in because I think there's a very strong likelihood of a recession. And while it appears the market bottomed last October, when we've looked at it, there's never been a recession in which the market didn't bottom during the recession itself. So I don't think a recession has started, but we're probably close to the edge. You talked about the yield curve before.
What?
If you look at the New York Fed's probability of recession, which essentially looks at the 3-month, 10-year, that likelihood of a recession is higher than it's been at any time since 1981. You look at flagging
It's
profits.
called a recession.
You look at now more weakness in the job market. I think it all adds up to the likelihood of a greater recession. I don't think at 19 times earnings that's priced into the S&P 500.
Then why is the Fed moving tomorrow?
Fed's moving tomorrow because inflation's sticky.
Okay.
And so the
These
Fed's not
people-
there.
hey.
And I think, unfortunately, 12 years of QE taught a lot of
He
investors
look like he
that
knows
perhaps
something.
the Fed was there just to bail them out.
He's just going to be like, hey, it's toast.
And the Fed's really there to preserve price stability. And so this is unusual for a lot of us in the markets because we've been accustomed to having the kindness of strangers bail us out when we get into trouble. But inflation now is kind of the binding constraint where the Fed really can't.
Guys, he basically just said in a bunch of words, normally we wouldn't be so worried because we could just turn that money machine on. But right now, inflation's so high, there is no money machine. More or less, we're hitting the debt ceiling.
Really
Jesus.
Certainly the Fed can't.
Hey, y'all wanted a Black Swan event? Boom! Hey, Q Black Swan event number
Given the fact that
79. I don't know how, I mean,
the
this is,
inflation numbers are still.
there's so
much
many
too
there. I
high
would
and
not want to
certainly
be a
much
short
higher
seller.
than their own targets.
So you're talking about bailouts. We've been watching a slow rolling banking crisis for about a month and a half. And the thing that gets me is we keep hearing at regular intervals, well, this seems to be over now. Well, the worst seems to have played out. And then Tuesday happens and you watch all the regional banks dive. To me, it seems we have not gotten through some of the worst of the debt that these banks are holding, especially in
This was the same thing I made. I don't know what video. It was probably like last week where I was like, they haven't solved anything. We're burning the economy from both ends. You got one hikes that are increasing interest rates, smoking the literal economy, whilst you have money going bad. So like even bringing inflation down doesn't matter because the cost of living and the prices of things are going up as the dollar is decreasing. This is the Wild West. Guys, we're past the outer banks. And people looking at Jay Powell like they can solve this. Janet Yellen's losing her wig.
In commercial real estate. What do you
How do you
make
fix
of where
this?
we are today and what that portends this week and into the future?
Maybe it goes back to Jackie's question is, you have to know what you don't know, right? And I think one of the things that's bothering me now is that everyone from the administration to market participants to bank CEOs said yesterday, this is over. This was the final, and then you
the
come
biggest bank CEO yesterday said this is over.
Right, and then you come in today and you say, well, it's not over, which clearly, I know I don't know, but I know they don't know either. And I think it stands to reason if you have 4,500 banks, it's not going to be 4 or 5 of them that are having these issues when what we did in terms of monetary policy and fiscal.
Guys, this was all, you're watching all these banks that are popping up, FRC, these are all banks that have been doing fraudulent loaning of money, bad fraudulent bets. These are people that have been funding short sellers and synthetic shares and all that. That's what's imploding right now. Just mind y'all that. And there's a lot of those little banks. I keep coming back to the point. That's how you have these Ken Griffin and short sellers that are able to continue fight because they were borrowing money from all these little 4,500 different banks, right? Well, now the bottom half of that's about to fall out.
The last several years changed things dramatically, and the Fed has had to raise rates so aggressively. It would be it would be wonderful to think it's over, but I wouldn't bet.
It ain't even started
on that. I think there's going to be more pain to go.
On top of all
this
this,
guy
we've
right
got
here
the
look
debt
like he
ceiling
knows
debate,
something.
The June 1st deadline.
He's good at
We've got
holding
McCarthy
secrets.
saying, we'll raise the debt ceiling, but we want you to cut some spending. And the Democrats are saying pretty much in so many words, absolutely not. The last time we saw this in 2011, we lost our AAA rating from S&P. If that were to happen again, I have to imagine that it's not going to make the situation much better.
No, and I think the difference now too is that we have $31 trillion in debt. I don't know what we had then, but it was a lot lower. It was probably more like, I want to say it was probably 14, 15 trillion dollars. Don't quote me on that, but it was a lot less.
Yep.
Now you also have a situation where the interest expense on the debt
31 trillion
has been subsidized by the Federal Reserve. So the weighted average cost of our debt outstanding is less than 2%. A 2-year Treasury is 4%. And 50% of our debt matures in the next 3 years. So it seems to me you have to have restraints on spending because the interest expense alone will cause the debt and the deficit to explode in the next couple of years.
Jason, thanks so much for stopping by. Always good to see you.
Oh, it's great to see you all. Thank you.
Jason Trennert.
And maybe 31 trillion isn't a lot of money when you spell it out across the nation, but hey, it don't sound good. I'm just saying, how'd you get 31 trillion in debt and then the money's imploding? There's no money. Guys, pulling over here, Janet Yellen, like I said, is losing her wig. This lady looks more and more like a little gremlin each day. More or less, but up here, she warned that the U.S. could run out of cash by June 1st, Yellen warns Congress. Basically, Yellen's already saying, hey, we need y'all to raise the debt ceiling. Guys, they are screaming for the money printer for the economy. Just reading down it quickly on this. And I'm actually going to put the link up here so y'all probably can watch this little 3-minute video. Treasury Secretary Janet Yellen warned lawmakers Monday that the federal government could run short of money to pay its bills early as June 1st unless the debt ceiling is raised soon. Yellen acknowledged the date is subject to change and could be weeks later than projected, given the forecast and government cash flows is difficult. But based on April tax receipts and current spending levels, she predicted the government could run short of cash by early June. Guys, all this stuff is lining up. This right here, you talking about we running out of money, literally the money's going to be gone. How do you short? How do you short with no cash? Oh, turn me up. Turn me up. Like I said, I need AMC to AMC, I know you ready to pop, but stay low, baby. Listen, I need on the 12th. I got some more. I'm going to put some more juice in your tank, baby. Just hold down. Don't go crazy. I know you're ready to run. Don't run yet. But let's hear. Given the current projection, it is imperative that Congress act as soon as possible to increase and suspend the debt limit in a way that provides longer-term certainty that the government will continue to make its payments. Guys, turn on a money machine so that the government can pay people. Whoa! Yellen wrote in a letter to House Speaker Kevin McCarthy. The warning provides a urgent timetable for what has been a slow motion political showdown in Washington. Guys, she needs this debt ceiling raise. This is, guys, we're about to step into something outside of the realm. Like I keep saying, the Outer Banks. Obviously, if you're 45 or 50, you've seen downturn. But as a man that's approaching his early 30s, this is my first actual. I've been alive through them, but this is the first time I've been in participation of it. And I'm telling you right now, I feel like this is going to be the worst one that has occurred. This one is the spinoff of one that occurred in 2008, where they did bailouts. Imagine you can't do the bailout part now. So the monsters built up in the background, $31 trillion worth of debt, and now you can't do the bailout? Oh, wait a minute. That don't sound good. Guys, looking at our AMC Stonko tracker, we have 1 million synthetics that have popped up here, borrowed at 177%. Like I keep saying, that's irrelevant information to me, and I'll show you exactly why. Here they popped up millions of shares from the abyss of nowhere, but that, again, doesn't concern me with anything. I just want to show y'all something here. I'm going to show y'all what links up with that. But in the money, still out of the money, baby. These puts are getting smoked and tarnished, and it's only getting worse. And it's only getting worse. It's only getting worse. It's only getting worse. Let's pull this back up here. But now, what I want to do correlated with that was pulling up here. Appreciate you here, data zero. 18 million failed to deliver is reported. So they've run 18 million failed to deliver. This was a spike today, which would also explain they just borrowed a bunch of synthetic shares that they can't cover. So like I said, this is irrelevant information. And the price is still at 550. Look at the chart. You saw this pattern here. Look at this. Barcoding and it's snatching. Look at this right here. What type of, what is this? What type of candle is this? Look at the barcode. And that thing was still snatching out. This actually right here might have been a little bit of natural movement. I believe this sell-off actually occurred a little bit with the fact that earnings is coming up. Usually there is always a pre-earning sell-off by the news sell the whatever. Y'all know what the saying is. Basically, earning comes up. Whenever there's news, everybody's buying in. And when it comes up to when the event happens, people dump off. But like I said, the cup and handle action that's scooping up under this, I said, wait a minute. This is some strength. Look at when it came down and hit that 537 level. And snatched. And then, like I said, we've been barcoding, guys. This is where I know they're tapped. Look at this. We've been righteously barcoding the last 4 days. We've been side trading, but actually going up. Pull up on the 5-minute here, just so you can see. There is no doubt that we have been moving up. That thing is cooking. That thing is cooking. There is no doubt. That thing is cooking. Let's pull it up over here. AMC short interest, 26.62%. Like I said, they just won't let me get my fiend off. I need that 27%, baby. I just want to see 27% so I can just stand over. I feel like I'm standing over shorts just like this. Okay. All right, let's pull it back in here. 6.44 days to cover. Guys, also tapping back in on that Janet Yellen thing. Mind you, I believe that she also said they're stopping funding retirement funds right now. So like people's retirements is getting lackluster. I already know that my as far as Social Security, which I didn't plan to use anyways, but Social Security is going to be gone by the time that my group hit 65 or whatever. The limit probably be 89 by the time we get there. They just gonna keep just moving it back further, just trying to get people to work to 100. Let's see here. I think that should tap that, double tap that. All right, I think that covers everything, guys. One last part to fill in here. Listen, AMC is suing Robinhood for the whole bankruptcy notice slip up that occurred. I asked that question, I want to know what y'all think on this. Do you think that was actually a mistake? And then how easy is it to make that mistake? You know what I mean? Like that's a just like I said the first time, I was like, that has to pass down by people. There's just no way to slip up on, and that's just funny. I think, is it Mullen, the one that declared bankruptcy or something like that? It's just funny how do you even code that? How does that end up on the website, up on the AMC? Accidentally. I'm just saying, these guys are blatant. I just tell you that it's like they're ruthless enough to like say things like, what if they were sending, like I said, and this is all right here, this 10-4 hat right here, guys. This has no validity with this symbol. What if it's like they're saying, hey, AMC's toast. You know what I'm saying? Hey, they're not getting the conversion. They're about to get raptured. What if they're saying that? What if they're, what there's got to be some rhyme or reason that popping up there. And, of course, right ahead of earnings, Adam Aaron is supposedly pissed, but like I said, he's suing Robinhood. Of course, retail will probably get no lick of that there, but I just wanted that to be noted up there. I was like, when that happened yesterday, I was like, how could you accidentally? That's like when they just accidentally took the buy button away. It's like, no, wait a minute. But they got sued for that too. Hey man, y'all hold it down, guys. We're in something crazy right now. This is it's almost like you can do nothing but smile. Like I said, we're ahead of the game. With our investments, Tesla, XRP, Apple, Nvidia. Guys, you need to be sprinkling apart. Get some gold. Get a little corner of that gold. Right now, we're playing a game of the preservation of cash. You're preserving your LLC, right? The stock market, your money, this is your business. And we're staying afloat a down economy. But right now, it's times that if you figure out how to master this, you'll be a boss for years to come. Because if you can figure it out when it's down, you know that you're flying when it's up. But I'm just telling you, I know that there's banger companies that are at the cheap. There are other future, and you don't want to get short-minded because right now you're getting hit with all this news. Every single day is something crazy right now. It's like, you're like, wait a minute. The economy is really imploding. We thought we talked about it happening, and it's actually happening. I can't believe that we weren't just 10-4 hatting. So now it confirms that no, retail isn't crazy. You can see what you see, and what you see is what's actually occurring. But hey, what a time to be alive. Y'all hold it down. Hey, until the next video, hey, we're crunching it up. Like I said, I always will be taking them golden pair of J's if y'all, I feel like we're going to have some cash flow coming in here. Like I said, you got to be prudent and quick with it. Much love. Hold it down, family. Yes, sir.